Welcome back to Market on Close. Let's talk some more about what we learned in today's session, and that was once again that gold never seems to last long in any kind of upward motion. Scott Bauer, CEO of Prosper Trading Academy. This is on our list of things to discuss. Scott, gold had moments of a hope here the last 3 days. Maybe it was going to work in this environment, and then we saw Powell talk some non-transitory words, and pop, there it goes.
Very fleeting moments, and you know, as you just mentioned, gold, every rally in gold over the last 4 weeks, 6 weeks, 8 weeks has been met with selling. And there's just, the dynamic of gold being that inflation hedge, being that, safe haven, if you will, it just hasn't played out. It really just hasn't played out. And right now, I think there's still massive headwinds in gold. I think we're going to hit 1750, Oliver. We talked about this ever since this was like, just around the 1800 level. We talked about it coiling there. We talked about, are we going up or down from there? And this has had every reason to rally. Just can't get out of its own way.
Scott, looking at that concept of getting out of its own way, is it showing up here as one of the weakest assets in a rising rate environment? I mean, are Bitcoiners going to have a case to make here if every time the words tightening or of any sort come out of the Fed, gold loses its legs? I mean, Bitcoin's down 2 today, but gold seemingly is very responsive to that.
Well, the Bitcoin bulls love hearing that, and they will definitely hang their hat on that. I still, we talk about this all the time, and I'm still not certain that you can really make that correlation yet, even though Bitcoin is, it's been around for quite a while now. I just don't know that it really is that inflation hedge yet. However, that's why we did really see the Bitcoin rally. And it's down now, but we saw a big rally off of, what was it, 53,000 just the other day here.
Yep.
And a lot of that was on inflation fears. Now, just over the last 24 hours, there was a large liquidation of shorts in Bitcoin. Actually, about $355 million on chain liquidated in the last 24 hours. Could have been people, just getting out, and that certainly helped. Right, that just certainly helped the overall price here as well. But yeah, I think right now, if you're looking at a short-term trade, and you had to go Bitcoin or gold, you throw everything else out. You had to go Bitcoin or gold and say,
you're going Bitcoin.
I'm going to hold one for the next 4 weeks. You got to choose Bitcoin.
I'm with you there, 100% with you there. The other thing that's very spot on in terms of the way you've talked about Bitcoin with us, and my charts too, we're both, last time we found out, we were both at 57.5 as the battleground, right? And man, just to see the way it's hugging that line, amazing, 57.7, somewhere between 56 and 58 basically. Scott, does the ease of the bullish Bitcoin call change if we slip below this battleground?
Well, we have, right? We also talked about 55 as being really the next line in the sand, and it really did hold there. So we know what happens with Bitcoin, Oliver. When this thing coils, when this thing consolidates for any period of time, and we are doing that right now, we tend to get really, really huge moves here. Could be 10 to 15% move imminently. When I say imminently, literally in the next, few days or so, based on this consolidation. I think it's to the upside here. But if it fails to hold this level and certainly fails to hold 55, now you're talking a level that, we might see back in the 4 handle.
Okay. All right. So we are still in this kind of no man's land at this moment, this purgatory of price for now. Scott, helpful, useful to keep tabs on these relationships, seeing gold respond to language from the Fed and BTC respond to lines on the chart. Appreciate it, Scott. Good stuff, CEO.
It's always useful to look at that.
Yes, sir. All right. Thanks, and have a good one, Scott.